This is Bullseye Joe, and thank you for watching. This is video 3 on how and why to learn to invest your own money. Videos 1 and 2, if you watched them already, video 1 was just why I learned to invest, and the answer was opportunity. There's a lot of opportunity and money to be made if you do it well. And then number 2 was, can you beat the market, or is that a stupid goal? And I say you can beat the market, but it might not be easy. But if you're interested and you enjoy it, you can do it, and it's sort of fun. I'm not really a big sports fan. For me, like, the stock market is like my sports. Like, I follow companies maybe the way other people follow sports teams. But you don't have to get that into it either to do well. So anyway, this video is just sort of an introductory video to beginners about what is the market. Basically, I just wanted to say, and I said it in the other videos, is you don't need to be a genius, you don't need to go to college, you don't need to have studied finance to learn how to invest your own money. I really believe the powers that be, the people who run money for a living, want you to think that so that you don't invest your own money and that you hand it over to the professionals and they invest it. And usually they invest it and they just take like a percentage, and that's how they make their money. Or they can be Bernie Madoff and just steal all your money. That's why if you were investing your own money, I guess you don't have to worry about that. Or you could at least invest some of your money. You could, give some of your money to mutual funds and then maybe play around a little with like a pet stock. I had mentioned Apple in a previous video, and that's a stock that's done very well, and you could have made a lot of money. So anyway, this video is really for beginners, and if you know anything about the market, you could probably not watch this video. But, so basically, what is the market? Well, most people, when they say the market, they mean the stock market, and they often talk about the Dow. You hear it on the news, you hear it on TV, oh, the Dow's up 300 points, or the Dow's down, 2% today. And what is the Dow? The Dow is 30 stocks. In fact, I got a list right here of the 30 stocks. They're stocks you should know. So it's not anything mysterious or anything complicated. I'll give you an example. General Motors, yeah, that one's not doing very well. Citigroup, that one's not doing very well either. But then you have McDonald's, Johnson & Johnson, Home Depot, Walmart, Procter & Gamble, ExxonMobil, Boeing, Pfizer, Verizon, IBM, Disney. So you got 30 of like America's biggest companies, and a lot of these companies are international too. They have international exposure, which sometimes that's good, sometimes it's not. So that's what the Dow is. Now basically what the Dow should be is you just add up the prices of those 30 stocks, divide by 30, and that's the price. Now why isn't that the case? Well, because this Dow has been changing for years. They have stock splits, and they put a stock in and they take a stock out. So they have a thing called the divisor that sort of adjusts for all those changes that has happened for years and years and years. And that's why we talk about like Dow 8,000, Dow 9,000, which is a lot higher than adding up 30 stock prices and dividing by 30. But that's not important. What's important is how much it goes up and down percentage-wise. Everything in the market is percentage-wise. People want to buy penny stocks because they think they can double their money easily. Hey, this is a 50-cent penny stock. If it goes to $1, I double my money. Well, you can double your money in huge stocks too. Google was $300, and then not very long after, it was $750. So you more than doubled your money in Google, and yet that was a $300 stock. But what mattered is you doubled your money. It doesn't matter if the stock was $300 or the stock was 50 cents. What matters is you doubled your investment. Or obviously you could lose your money too, but just in beginning investors, and again this is sort of what this is geared to, thinks buying a cheap stock is better. Well, it's often not better. Look at Sirius. Sirius is a famous stock that a lot of beginners wanted to buy. I think Sirius is 12 cents right now. Now, when Howard Stern first got announced, that stock got over $9. So, there were chances to make a lot of money in that stock, but lately there hasn't been. The company's not doing well, and people aren't buying cars, and so, people don't want to pay for radio in a recession. So, that stock's no good. But again, people are buying it at 12 cents thinking they're going to make a lot of money. Maybe they will, but just, it doesn't matter what the price is, it matters what the percentage move is. That's for beginners. Beginners don't often understand that, and it's key. So basically, that's what the Dow is, that's what the market is. But then you hear about the S&P 500. To be honest, if you looked at like a graph of the movement of the Dow or a graph of the movement of the S&P 500, they're going to look sort of similar. And the S&P 500 is 500 major companies. I got a little list right here. Adobe Systems, Advanced Micro Devices, Abbott Labs. You know, so there's some of the ones that begin with A. And then, you know, it goes all the way down to things like Walgreens, Walmart, Walt Disney, Wells Fargo, Xerox. You know, these are all major companies, Yahoo. So these are all companies you've heard of. It's just 500 of, again, of US's biggest companies. And so, you know, people say, how did the market do? Well, they sort of assume, well, these 500 are a good representation of how the whole market did. Or for the Dow, they say these 30 stocks are a good representation for how the whole market did. But again, if you own individual stocks, or even if you own mutual funds, they can move differently than the market. Because you could own a mutual fund that's heavily invested in financials only. And the financials have done horrible. So you could have lost way more money than, say, you would have lost just in the general market. And again, this is all stocks and the stock market. But then you have other markets. You have the bond market, which is huge. You know, you have U.S. treasuries, U.S. bonds. You know, the government, you know, selling bonds. You have, you know, GE selling bonds. You know, major companies sell bonds. Basically, what is a bond? It's basically a loan. You know, they sell a bond. You give them money. That's the loan. They promise you a certain amount of interest, and then they promise you your money back at the end. That's sort of what a bond is. Whereas a stock is you're sort of part owner of the company. You know, they're not promising to pay you any interest. They're just saying, hey, you can buy into our company, and if our company does well, hopefully the stock goes up, and hopefully you make money. So I was just going to rattle off some terms. Again, don't be afraid of the market in learning about it. If you're interested, don't think that you can't learn it. I mean, so you have all these terms that you don't know, right? You might not know what a stock is, or a bond is, or what the Dow is. You might not know what a mutual fund is, or a hedge fund, or an ETF. You might not know any of these things. You might not know what the LIBOR rate is versus the federal funds rate versus the general, you know, mortgage interest rate or car interest rate. But these things are all easy to learn about. They really are. In fact, I was just looking on the internet real quick to see where you get good information. And basically, you know, Wikipedia had tons of great information. You know, you type in any of these terms, you know, spend 10 minutes reading, you know, maybe spend 3 minutes reading Wikipedia for any of these terms, and you should have some understanding of it. I don't really know of a good book to get all this stuff. Basically, I read the newspapers all the time, and I read the internet all the time. So I think that's where I've learned all this stuff. I've learned this stuff over, I don't know, I think I said like about 10 years of paying attention to the market. You know, I graduated engineering, so I'm sort of math oriented, but I don't even work as an engineer. So anyway, none of that's too important to you, probably, but that's the end of this video. Basically, just what is the market, and don't be afraid of all these terms you hear.